4 years now, real estate agents have asked their brokers to pay their LLC. This has been a problem because it was not compliant with TREC guidelines. We are going to address a new change to the tax system, as well as cover some tax deductions that you may take advantage of this year, because a lot of changes have happened. And as real estate agents, we're independent contractors, and there's a lot of things that you can benefit from. So here we have my good friend Lisa. So thank you for being on our podcast here.
Oh, it's such a good time to see you again.
Yeah.
And thank you so much for having me.
Yeah, so let's jump right in. The first big news is, and we've encountered this a lot ourselves, is that, CPAs will often advise real estate agents to get paid in an LLC, not knowing that while it may be legal for in the sense of paying an LLC, TREC, technically it was not legal.
Right.
So what's the big change that we had on January 1st?
So January 1st of 2024, the Texas Real Estate Commission decided that it's now acceptable for a broker to pay commissions to a limited liability company or an S corporation.
Okay.
The really big advantage to that for the realtor is that now they can both protect themselves with a separate legal entity. So always there's the concern that if some legal lawsuit or such was brought against them individually, then there's some risk there that perhaps, especially as an independent contractor, that your personal assets are at risk. There's also the
Tax advantages, right?
well, the tax advantages really come with an S election.
Okay.
Now, you can do that either through a limited liability company or through a corporation with an S election.
Okay.
So there's two different legal structures that you can to get this tax advantage. The real advantage around that for realtors is that especially if you're doing this on a full-time basis, often your net profit after you get your commission minus all of the expenses that you pay to your broker, plus all of the expenses that you get to take as an independent contractor, like your mileage and your meals and that sort of thing. That then gets reported on your personal tax return on Schedule C as a sole proprietor. And then you have to pay 15.3% of unemployment tax on that full amount.
Right. Okay, let me try to break this down in layman's terms, because I kind of went through a little bit of this recently myself. So what we're talking about here, this is not for the real estate agent that's making 50, 60, 70,000 a year, right?
Well, it's possible.
It's possible, but the real advantage comes when you're making 120 or more, because, and I think this is one thing that real estate agents really need to know, is that if you're in the S election, and correct me if I'm wrong here, that you should be paying yourself a reasonable salary.
Yeah,
and the reasonable salary is not subject to self-employment tax.
Correct.
Yeah.
So
So you're saving 15% just by doing that.
Well, you're saving half of 15%.
Because you already have your standard deductions.
Well, you have the standard deduction, and then if you've ever been employed at McDonald's or had another W-2 job where you were an employee with somebody else, out of your regular paycheck, they would take your federal tax deduction. That's the standard deduction that you talked about. And then you, as an employee, also have to pay Medicare and Social Security, but you only pay half of it. The employer pays the other half.
Yeah.
When you are an independent contractor, you're responsible for the whole thing.
Yes, right.
Right.
Yeah.
So you get to save, if you do this S election, you get to save half of that employment tax on your wages.
Right. On your wages. Now, I think what's important to note is, let's say you make $200,000 a year in commissions, right? If you pay yourself $100,000 a year, and you take the other 100,000 as distributions. There you go. Then you're going to pay the employment tax on the distribution, right?
Oh no!
No.
See, that's the good part
about
having an S election.
Okay.
Is that you only pay employment tax on the wages.
Oh.
So any distributions that you take have no taxable impact. None.
There's no self. None.
None. Okay, so follow me here.
Okay.
I'm going to use your math for right now.
Yeah.
Try and do it in my head here. Start out with $200,000 in commissions. Now, remember that out of that commission, you still have to take all the rest of your regular business expenses. Okay, so you have fees that you're going to pay your broker. You've got mileage. You've got meals. You've got maybe some travel. Certainly, your licensing fees and all of that sort of thing to keep your current. So 200,000 minus all of that, let's say that comes down to 150,000. Okay. Then we're going to go and we're going to say that a reasonable wage, that we'll go back to that in a minute, but the reasonable wage is $100,000.
Yeah.
You're going to take that as a paycheck. And you do have to have your federal withholding on that. Okay. Based on whether you're married and whether you have dependents and that kind of thing, okay? And then you do pay the employee side of the Medicare and Social Security.
Gotcha.
Okay, so they withhold all of those taxes and it gets sent automatically to the IRS.
Yeah.
Now on the business side, it has to also pay the other half of the Medicare and Social Security.
Okay.
But that's a business deduction, which means now you went from 200 to 150, minus the 100 in wages, minus that 6.2% on the 100.
Yeah.
So another couple, $6,000 or $7,000.
Yeah.
Okay. Now you have only this much.
Yeah.
That you're actually going to pay taxes on.
Right.
Instead of the 150,000 that as a independent contractor you would pay federal tax on. Plus you're going to pay the whole self-employment on the whole 150.
Wow. Okay. That's great. Okay. And who would this not be good for? Why would you do this? Why would one want to consider not doing it?
Well, as you mentioned, we have to run this paycheck.
Yeah.
It is like a requirement of the whole deal.
And many people, I've seen this, they want to do the LLC. They wanted to get, they're not actually paying themselves.
They're not actually paying themselves.
Yeah. Which is subject to an audit.
Not only is it subject to audit, but you might also lose your S election, which means that if you had filed the next year properly, and then the next year you didn't and you were sloppy about it.
Yeah.
Well, you might lose that S election, which means that now you're going to have to go back and penalties and interest on everything that the IRS says you didn't do right because you didn't follow the rules.
So if you're watching this and you decide that you want to do an LLC, okay, you have to take a salary.
Absolutely. Must take a salary. Like it's an absolute requirement.
Yeah.
Well, so that means that there's more administrative stuff that you have to do around your business.
Well, and also because real estate agents are, it's feast or famine sometimes, right?
Absolutely.
So you got to have a salary that you can cover every month.
Right. Yeah. Now, it's when you take the salary isn't identified by the IRS. You must take a reasonable salary for the entire time that you have the S election for that year.
Yeah.
So let's say it's for the whole year, and that means you must take a salary for the whole year. That's reasonable for the whole year.
Yeah.
But you can only pay yourself once.
Oh.
You would just have to take a really big paycheck.
Yeah.
Okay.
Okay.
So, but who here is an HR expert?
Right.
Not even me, and I'm a CPA.
Yeah.
So it's best for you, if you don't if doing payroll is not your job, then you want to make sure that you have a business do it for you, right? An expert do it for you.
Yeah.
Well, that's going to cost you $50-$60 a month.
Yeah.
To make sure that happens, regardless of whether or not you take one at the end of the year paycheck, or you take it monthly. You're still going to have to pay a monthly recurring fee for them to make sure that all of the forms are filed. Because now you have additional filings with the IRS.
Right.
941s, 940s at the end of the year, W-2, right? So you have some additional administrative work. Highly recommend you outsourcing that to an expert.
Gotcha. Okay.
So there's more work and more cost.
Yeah. So when it comes to other kind of like deductions, I know there's been a lot of changes. For instance, I know that a lot of real estate agents will get like the 6,000 pound car. That went, correct me if I'm wrong, went from you could deduct 100% of that cost to 80, right?
Currently, that is correct. It went in 2023. That dropped, but it's in the middle of things right now. They're looking at actually bringing it back to 100 for 2023. So be on the lookout for that.
Gotcha. And what I've been told is that when you're doing this, you need to, whatever usage you get out of that car, whatever percentage of usage you get out of that car, then it means if you're doing 80% business and 20% personal, that's what you get to deduct.
Correct.
But kind of one of the trick to the trade is if you buy that car last week of December and you drive to the office once and show some property once and then you park that car, it's just for the year you got it.
If you take the full 100 or modified 80%, then that's correct. You would only do it in the year that you purchased it.
Gotcha.
You could, let's say that this year, you're not expecting a very big salary, or, you're not expecting a lot. Economy, or you've decided to take some time off and go to Greece for a couple of months or something, right? Maybe then, even though you've bought the car this year, you decide not to take the full deduction this year.
Okay, so you
can spread it out over time.
Okay.
All right.
Interesting.
There's some tax things that you can do.
What about meals and entertainment? Because I remember during COVID, they went to 100% for a while, for like 2 years, right? What are they now?
Oh, it's back to 50%.
Okay.
And it doesn't matter whether it's there for a while. It was if you got it from a restaurant specifically, it was 100%. Now it's just back to the regular meals. Now remember that entertainment, which now it's been a while since entertainment has been even thought of as a deduction, right? But entertainment, that could mean taking your prospects out on a fishing trip. The trip itself is not deductible. Now, the travel there and the meals there, assuming that they're separate from maybe that charter, those are deductible.
Okay.
Meals at 50%, but right.
Okay.
So all of that. Now, it doesn't matter whether you're an independent contractor or you've decided on a limited liability with this S election, or even a corporation that's now got this S election. You can take these same deductions. The difference, though, between an independent contractor and the S election is that in an S election, you must have what's called an accountable plan.
Okay.
And that's an IRS term that says, in writing, there must be this policy that the company has and that it's across all employees. Now, remember that you're now an employee.
Yeah, right.
Right? So it's this plan, and it has to be in writing, and it says, I must have substantiating evidence. That means the receipts and the invoices and all of those little pieces of paper that that you used to keep in the shoebox. The shoebox of shame, that doesn't cut it anymore. If you want to have this S election and get this really great tax advantage, you have to be more organized.
Okay.
Right? So in order, if you've paid with your personal credit card or your personal debit card, then you have to fill out an expense report, make sure that you have all of the receipts behind it. The company must reimburse you.
Oh, wow. Okay.
Right. So it's a little bit different than in an independent contractor where it's kind of a little bit more muddy.
Yeah.
Right.
It's kind of easier.
Easier.
Yeah.
Right.
Okay. So the company reimburses. Okay.
Okay. Now that's if you pay with your own personal
Right,
card,
but
right?
you could get a credit card that has your LLC
on it.
And that, should you keep all the receipts?
You still have to keep all the receipts.
Yeah.
Because you have to still follow everything that's in the accountable plan.
Yeah.
But you would have, in theory, you had to do that anyways.
Yeah,
right?
but don't you have, isn't there a limitation? I thought I remember it's like 75. Okay, yeah. Okay. So if it's under 75, you don't have to
except
do
for lodging. Lodging, you have to prove up 75, any amount.
Okay, gotcha. Okay. What other tax, I don't know, advantages or deductions are available to independent contractors or real estate agents in general?
Well, keep in mind that education is one of the things that I don't think that they think of a lot.
Yeah.
And potentially even networking. So if you go to a networking event, if you decide that talking to Lisa, the velocity detective, is going to help you and your business a little bit better.
Yeah.
And that costs you some money to do that, right? Those are some things. We talked about the car.
Yeah.
Sometimes it's hard to keep up with that mileage.
Yeah.
You must keep a log in order to make that happen. It doesn't matter whether you're an independent contractor or an S corp. You still have to keep a log.
Right, but what I think I remember from years ago is you can just keep a log for 3 months.
Well, per the IRS, you
Yeah.
really need to keep a log of everything all the time.
Yeah.
Now, you can use, if you weren't as good at doing that as you should be,
Yeah.
you can keep an estimate, right? But
And there's also the standard, right? There's a standard deduction for mileage per year, or is it
well,
right?
it's 67 cents per mile
okay.
for 2024, but you have to know how many miles.
Yeah, right. Okay.
So, and
there's apps for that.
there's apps for that.
Yeah.
Mile IQ is a great one.
Okay.
Right. So let's go back to the S election because this is a huge tax advantage
Yeah.
for a lot of realtors. You mentioned earlier, well, it's not for everyone, and you're right. There's 3 reasons that you should think about a different legal entity for yourself. The first one is risk. By the words limited liability, you're able to separate if somebody brings legal action against your business.
Yeah, but here's what I would say about that. Okay.
There's some complication.
Yeah, the complications is that when an agent is writing a contract, they're not going to put their LLC on it.
Right. So that's a consideration that a lot of people are thinking about.
Yeah.
But we don't actually get that as realtors.
Now, I mean, maybe they can. I don't even know.
No, you can't.
Yeah, okay, that's what I thought.
So one of the things that you should think about as a broker is that if somebody comes to you and says, I have an LLC, write my checks to this LLC from now on, so I can get this tax advantage. They have to prove to you that they've registered and been approved by TREC.
Oh, wow. Okay, good. Okay, that's good and really good to know.
Yeah, that registration, it takes about 10 days.
Okay.
And you have to submit your Secretary of State information that proves that
Good standing. Yeah.
you're in good standing, that it is a limited liability company or a corporation that has its S election, which is an additional form that you have to file with the IRS.
Yeah.
And that you own 51% or more of that company.
Gotcha. Okay.
Right? So the other limitations that you have around it, you just mentioned one, as the limited liability company, you're not going to be putting yourself out there as the listing. Right? You can't advertise under that name.
Right, because that's highly illegal.
No.
Yeah.
Right. So there are some other things around having a limited liability company that you don't necessarily get as much of an advantage.
Yeah.
So the second one is ownership. Like I said, for Trek, you have to have 51% or higher of the ownership. I'm not sure why you would want to have somebody else because you're the only one with your real estate license.
Yeah, right.
But
Who knows?
Who knows? Yeah. And then the last one is tax.
Okay.
So by having a limited liability company, it seems to me that the only thing you would be concerned about, so you're not concerned about the risk piece of it.
Yeah.
Plus you have insurance anyways.
Yeah.
You're not really concerned about the ownership piece because, well, you're the only one that has the license.
Yeah.
So really you're only concerned about the tax piece.
Gotcha.
So then we have to say, are you going to get that tax advantage?
Yeah.
And make that S election by getting the LLC. Otherwise, it's kind of a moot point.
Right.
Why would you want to do it? I mean, it costs you $300 at minimum.
Yeah.
Because that's just the state filing fee.
Yeah.
Plus, you have additional filings now. If you're a limited liability company or a corporation, you have state filings for the entity itself.
Right. And then it's probably going to cost a little bit more for an accountant to work on that.
The accountant, now, see, that's where the separate tax. If you're going to take the S election, then you actually have to file a separate tax return, which is more dollars.
Yeah.
You have to, as I mentioned, you have to have all of these rules around yourself. There's more administrative work. Make sure that you really want to do this.
Yeah. Speak to an accountant.
Well, for sure. Yeah. Consult your wise counsel there.
Yeah.
Kind of a breaking point, break even, if you will. You mentioned, well, you wouldn't want to necessarily do it until you're making $200,000 or something, right? Yeah. Really, the break-even point of where that tax savings from the self-employment tax offsets with the additional hard costs, the dollars, right, of that additional tax return, the administrative costs of that payroll, and so forth. It's around the $50,000 or $60,000 net.
Right.
Okay, that's not your commissions that you're getting.
Right.
It's after all of the expenses.
Yeah, gotcha. Okay. Okay, so some other deductions. What about home office? What is that?
So there's two ways to get home office if you are an independent contractor. One is now it has to be a dedicated space. Yeah. It can't just be your dining room table that, once a day you clear everything off.
It's got to be an office.
It has to be a space that is...
Or a nook or something.
Right. A nook is okay, but it has to be really a nook, not just like a corner of your gym or something, right? The easy way, the simplified method, is $5 per square foot of space. And that's for the whole year. Okay. With a maximum of 300 square feet.
Okay, so 300 square feet. Okay. All right. What else we've got? We got mileage is 68 cents.
67.
67
in 2024.
Yeah.
Now, let's go back to the vehicle. Yeah. If you're going to have a limited liability company, and you're doing the S election because it makes sense for you, and you're willing to follow all the rules, which sometimes realtors, they love what they do, very passionate about being a realtor, but that whole administrative accounting side of things, that's sometimes tough, right? Yeah. You got to commit to that. Well, maybe they do have this vehicle, and 99% of the time, they actually use it for the business. It might be they could buy it through the business.
Okay.
Right. Some disadvantages to that is sometimes you don't get as good of interest rates unless you've really just like in our personal world, we have our FICO score and that sort of thing, right? Credit score. Your business has its own credit score. Yeah. So if you haven't built that up yet, maybe you're not going to get as good of rates. Also, the insurance sometimes is a little more expensive.
Yeah. So I have another thing. I saw this webinar. I don't know if this is valid or not. The guy seemed legit, but so we do a happy hour once a month here for our agents. Okay. And I was told if you go pick up food, it's 50%. Okay. But according to the IRS tax code, that if the catering is at 100%.
That is true.
So catering can technically mean anything that's delivered to you.
It depends on what it is you're doing with it, right?
Right.
So the company holiday party, the the happy hours, that sort of thing.
Right. We can't just like order lunch every day. Right?
Every day doesn't count. Right.
No.
But the rest of that, yes,
Yeah.
absolutely.
Okay. And that's a big
And that's
advantage.
100.
Yeah, it's a big, like, so if you're having a company, like we have our company hour, if we're going to, we're going to get food, it's better to have it picked up, even if it's spread from Uber Eats, right?
Absolutely.
So I think that's a huge savings right there.
Yes, absolutely.
Yeah. Okay. Well, well, first of all, where can people find you?
Well, my name.
And tell me this. What are the services you offer? Because I know you offer a variety of services too.
I do. My name is Lisa Sretanovich, and I am the Velocity Detective. I am a CPA, and you can find me at visionating.com. That's visionating.com. I love seeing professional service providers like realtors that have enough passion and drive and actual belief in themselves that they've launched their own business, their own independent contractor.
Yeah.
And but it just really breaks my heart to see them flying by the seat of their pants.
Which we normally do.
Yes.
Yeah.
You have no idea where your cash is going.
Yeah.
And you're chasing every sale.
Yeah.
Like everyone.
Yeah.
One of the things I love about Spyglass is that you guys really help those realtors find their niche.
Yeah.
And that's one of the first steps in helping them stop that flying.
The transaction treadmill.
Exactly.
Yeah.
So I'm on a mission to help them understand they don't have to give up what they're passionate about. They can still have this dream job and work for themselves and have time for their family.
Well, I really appreciate your time here. If you're watching this, you have Lisa's information will be in the description below. And, stay tuned for the next video. If you haven't already, like and subscribe for future content. Thanks, Lisa.